Today, Bitcoin closes the week trading at the $97,000 level. Coinbase shares drop after it posted its biggest quarterly revenue in 3 years. And Tether CEO Paolo Ardoino responds to JPMorgan research implying Tether could be at risk of selling its Bitcoin under US stablecoin proposals. Welcome to CNBC's Crypto World. I'm Brandon Gomez. Crypto markets in the green this morning. As of noon Eastern, Bitcoin gained nearly 2.5%, trading at the $97,000 level. Ether climbed 4.5% to $27.42. XRP jumped more than 13% after the SEC yesterday acknowledged Grayscale's proposal for an ETF tied to the token. For the week, Bitcoin ended about on par with the S&P 500 index, gaining more than 1.5%. Meanwhile, Ether and XRP jumped 5% and 15% respectively. Okay, let's talk about the top stories. Coinbase shares sunk this morning after beating Q4 expectations. The crypto exchange posted its strongest quarterly revenue in 3 years, with more than $1.5 billion in transaction revenue. That's nearly tripled year over year. This was in large part driven by the post-election crypto rally at the tail end of 2024. Coinbase was a key player in getting crypto-friendly politicians elected, contributing more than $75 million during the election cycle to the crypto-focused super PAC, Fairshake, and its affiliated PACs. This week, trading platform Robinhood also reported its Q4 earnings and revealed a year-over-year surge of more than 700% in its crypto transaction revenue. As of noon Eastern, shares of Coinbase fell by 7%, but was up nearly 12% year-to-date. Next, GameStop shares jumped after news that it might be exploring investing in Bitcoin and other cryptocurrencies. CNBC reported yesterday that the company is weighing whether it makes sense for GameStop's business to do so. Last weekend, its CEO Ryan Cohen shared a picture of him posing next to Michael Saylor, executive chair at Strategy, formerly named MicroStrategy. Strategy became the largest corporate holder of Bitcoin under Saylor's leadership. As of noon, GameStop's share climbed more than 5%. Last, Michigan joins the list of states proposing a crypto reserve. Republican State Representative Brian Posthumus introduced a bill to allow the state treasurer to invest in crypto. The proposal would allow up to a 10% allocation from both the general fund as well as the state's economic stabilization fund. The bill would also permit the treasurer to lend crypto to yield further return, as long as it doesn't present financial risk for the state to do so. Other states that have recently proposed crypto reserves include Texas, Pennsylvania, and North Carolina. All right, let's jump into our main story. JPMorgan published a research report this week suggesting the stablecoin issuer Tether might have to sell its Bitcoin, along with some other assets, in order to comply with new proposals in the US should they become law. The report says these bills, quote, allow only high quality and liquid assets as reserves. Well, Crypto World's Tanea McKeel spoke with Tether CEO Paolo Ardoino and asked him about it. He also shared how Tether is engaging in conversations with US regulators.
Paolo, thank you so much for joining me on Crypto World today. Let's start with this report from JPMorgan saying Tether could face challenges from the proposed U.S. stablecoin legislation, namely that's the Senate's Stable Act and the House's Genius Act. The analyst suggesting Tether reserves are only partly compliant under each proposed bill and that you'd have to replace non-compliant assets like precious metals, Bitcoin, corporate paper with compliant assets like T-bills. Your response?
Yes, thank you, first of all, for having me. First of all, I think that the JPMorgan analysis is missing the fact that Tether has over $20 billion in additional assets that could be repurposed and in order to cover the potential requirements of having the majority or if not the totality of the reserves in T-bills. Tether has already more than $115 billion in US treasuries. We are not new to change our portfolio and make it more conservative, increasing the amount of T-bills. In the past, we were criticized for having the portfolio in commercial papers. We publicly said we would move the portfolio in towards US treasuries, which we did. Now it's again, $115 billion and counting. Our interest is anyway going towards the totality in the US treasuries anyway.
We saw that Tether had been delisted from several European crypto exchanges when the MiCA regulation came into effect. But your market share in the US is more significant, I think. Do you expect a similar challenge if the US passes stablecoin legislation in the coming months?
Well, look, when it comes to MiCA, we have been very open to our concerns regarding the MiCA license. And our main concern was exactly the opposite one compared to the proposed laws in the US. So the MiCA license actually requires 60% of the reserves of a big stable coins like USDT to be in uninsured cash deposits left in European banks. We were actually advocating in Europe to have to allow us to hold the majority in country bonds, in government bonds across the different countries of the Union. That is very much in line with different of the proposal within the US that would require anyway 100% in T-bills or other cash equivalents. So just to say, I think would be delusional from our competitors thinking that we are going to leave the US banning us. So we are going to comply with the regulations. We are actually engaging with regulators, and in order to provide them the context and the proper education coming from the company Tether that created in the first place the stablecoin industry in 2014. So we know how exactly stablecoins work, how they should work. We were the stablecoin that resisted to the wrath of God when we were attacked in 2022. Differently from our major competitor in 2023, they almost died for having too much risk exposure to Silicon Valley Bank. So I think we have a lot of information and insights to provide to the lawmakers in the US, and we are going to do exactly that.
Yeah, a lot to show for yourselves, and obviously a favorite among crypto natives that have been using stablecoins for a long time, and Tether specifically. On the flip side, it has had a controversial history in the US, and we've talked about this already, the concerns about the reserves, and not to mention the DOJ investigations. Now, we have a very pro-crypto government here in the US, not to mention Howard Lutnick, the CEO of your bank, Cantor Fitzgerald, in the Trump cabinet. So I know that you are engaging in conversations. Can we expect to see you expand in the US this year?
So we are exploring the different opportunities that we have in the US. First of all, our most important achievement will be being part of the discussion around the potential legislation of the stablecoin bill, because it could impact also foreign issued stablecoins like USDT in this moment. But also, we are open to, and we are seeing in a very positive light, the openness of the new administration towards crypto. I think is very welcomed by the entire industry, not just ourselves. And so that opens to Tether also further possibilities that we are going to explore in the next few months while the regulatory framework in the US will become more clear.
What is sort of your biggest priority in these conversations about the stablecoin legislation, or what would be your big priority? What is, to you, the most important thing that the legislation get correct?
So I think when we hear talking about stablecoins now, the most important misunderstanding is the importance of stablecoins not for the US payment system, because in the US there are plenty of ways for people to pay US dollars, but the importance of USDT and US dollar stablecoins outside of the US. There are 3 billion people in the world that don't have bank accounts, not because they are bad people, just because they are too poor of any interest of banks, right? They don't generate enough money on a yearly basis to generate enough commissions for the banks to keep them as customers. So they need USDT. We have 400 million people outside the US that are using USDT because they don't have any alternative. And even more so, I think the big mistake of stablecoins that our competitors that are focusing too much within the US is the fact that they are trying basically to sell the US debt to US people, which I think is not what the US administration should seek. And actually, the US administration should focus on dollar stablecoins that are actually exporting the US debt and making more resilient, more decentralized in terms of ownership outside the US, helping to find new buyers for the US debt and make it really more decentralized and resilient to potential attacks from competitor countries. That is exactly what USDT have been doing over the last many years, and this fact is not very well understood because of some gaslighting that our competitors tend to do within the US administration, at least the past one.
Paolo also talked about Tether's motivation behind moving its headquarters to El Salvador, announced just last month. You can catch the full interview at cnbc.com/cryptoworld. Okay, that's all for Crypto World this week. We are back again on Tuesday after President's Day, and we'll see you then.